All right, perfect. Audio is working. So basically, yeah, as I was saying, it's really difficult to kind of like take swing trades when you're trading with a pair that doesn't really have a lot of volume. So now that we're going to simulate, it's going to be a challenge to maybe choose maybe gold or pound yen because both of those pairs have a lot of volume. Like, because volume, you kind of like gauge it through the London session, New York session. They have bigger moves over there, especially pairs like, your New Zealand has good moves, your JPY has good moves, pound USD has good moves, especially if the dollar is weak or the pound is really strong compared to the dollar. So picking and choosing great inter-session swings, like intraday swings, it's pretty good because sometimes if you can catch like a good move, maybe somewhere during the London session, if that trickles down into your New York session, now then eventually you're gonna have a pretty good trade, right? So what are we going to look at here today? Pound yen or gold? And also with that, we'll have to choose the months that will have a lot of volume. So that's going to be a key factor in doing this simulation here today as well. So let's go with 10 dates here. We're going to start from, let's see, we're almost in October. So let's do something in 2021 here, either way. Let's start from February and we're gonna go all the way till July because August was kind of like ranging over there, so we're gonna go till July. Start with 1st February, July. It's gonna be May, June, July. Okay, 30. All right, only one Sundays. Let's see, get dates. All right, so we got a bunch of these dates over here. We got February, we got March, April, May, June, July. Oh, we got all the months over here. Let's do the loner April because there's only one date for April. April? April, okay. Perfect. Start with April. Also, let's do gold. Gold or pound yen? Pound yen or gold? Pound yen. All right. All right, Paul, let's do pound yen. I like pound yen better, to be honest. And the reason why is because um, it doesn't have that many, liquidity wicks. And when you have liquidity wicks, like when price grabs liquidity in the opposite direction, it gets kind of difficult at that point because sometimes you can get stopped out too. So in this one, we're going to strictly focus on the 4 hour, daily 4 hour and the 1 hour. So the positions are going to be taken on the 1 hour time frame, and we'll see how the 4 hour moves from that point onwards. So it was April 4th. Let's start with $6,500. $6,500. We're gonna go with New York close. Leverage is gonna be history on chart 300 days if we can get it. I think it's gonna be great. All right, all right. Let's get these charts on. So we're gonna have weekly, daily, 4 hour, and 30-minute. That's it. We're not going to look at 15-minute. We're not going to look at 5-minute because if you're trying to do swing trades, it's better to not focus on this 15-minute time frame either way because that's a weak confirmation time frame. All right, so we got all these settings here. Weekly is bullish. Daily is also continuing up to be bullish. Looking at 4 hour time frame, also bullish. 1 hour time frame, also bullish. 30-minute time frame, also bullish. Okay, so the way we're going to start this simulation is going to be based off of the 1 a.m. 4 hour candle. If you guys know when that 1 a.m. 4 hour candle starts. Thank you for doing this. Go refresher before this week. Yes. So the 1 a.m. 4 hour candle. Okay, let me also put some sort of an announcement over here. 4 hour to 1 hour time frame refresher. Perfect. I'm going to be traveling next week, so there's going to be no live streams next week. We're going to go to Dubai for a week. It's a family trip. So let's do this over here. All right. So we're going to go off of the 1 a.m. candle. So we're going to switch to 4 hour, and actually let's go towards the 1 hour over here first. So we're going to slowly go towards the 1 a.m. candle. This is 8 p.m., 9, 10, 11, 12, 1. All right, so is this the start of the new 4 hour candle? It is the start of the new 4 hour candle right here, right? So if you look on the 4 hour, we can take a look at this right here. Okay, so let's take a look on the 1 hour here first. Actually, let's do a full daily analysis here now. Looking at the daily, let me just scale fix this here. Scale fix this. Scale fix this. Okay. Weekly is bullish. Daily candle is slowly coming up, but if you look at the daily candles over here, was like a weak candle here. It wasn't like bullish, it wasn't like bearish. It kind of like opened and closed at the same time. So this is sort of like a write-off at that point. Looking on the 4 hour, we can clearly see that the 4 hour is also consolidating, right? We have a resistance and a support. Let's bring up the line study. So this is what we got right here. We got a resistance on the 4 hour. We got a support on the 4 hour right here. Now, the whole idea is that if the 4 hour is consolidating in this 43 pip range, what do we have to wait for price to move? So probably we would want to wait for price to break the support to possibly continue down, or to break above this resistance to continue pushing up. And if you look to the left hand side, I don't think we can see something here to the left hand side. Let's see. No, we can't. So we're just going to have to play by the ear over here. Okay. Let's take a look on the 1 hour time frame. 1 hour is also consolidating. Now you can see the amount of consolidation here. And whenever you see consolidation in charts, it's always a good idea to kind of look to see, do we have any news? So let's take a look at the news here. We have no pound news here at all. Okay, so we're just going to let it play. We're going to wait for kind of like a price to break down or break up, and then we're going to go off of there. Even if you break above this area, it's like a 7 pip range, not enough range. If you break below this minor support, this is like a 19, 20 pip range, kind of doable. So yeah, we'll see. Also, we're almost moving into pre-London volume. Hopefully this whole week over here is not a dead week. Hopefully there's some sort of volume here in this week. Otherwise this could become very, very boring. All right. Yeah. Right now we're just consolidating at this point. Even if you do break below this area, is there a possibility for price to continue pushing down? We are slowly moving at this point. So yeah, we'll see. We shall see. This 1 hour candle is coming down to a close. Speed it up here a little bit, because we're going to wait for the 1 hour candles to close, and then we shall make some decisions at this point. All right, 1 hour candle has closed bearish. There's nothing happening at this point. We need to break above 153, what's this, 150 to continue pushing bullish. So if that happens, I think we should be able to take some sort of a trade over here because look, we're at this is 900 hours. This is 1 hour before London Open. This is 1 hour before London Open, so we gotta be very, very careful at this point right over here. Because if we're at like almost 1 hour before London Open, we don't know whether price is gonna push up or push down when the volume comes in with London Open. So we're coming into London Open right here. We have 3 minutes left. Time went by fast. All right, there we go. This is the London Open candle right here, right? We're consolidating. Volume is supposed to be here. It's a very, very risky analysis. We have to break above this area. Let's take a look on the 4 hour time frame. 4 hour is still consolidating. 4 hour basically doesn't give us any confirmations on where price is going to move. It's just that. I mean, unless we can push above 153, 170, other than that, I don't think price is going anywhere at this point. So let's just let it play and see kind of like where we move from this area here. Because if we're only visualizing the 4 hour candles, we need to kind of like visualize it above 153, 170. You can see the 4 hour candle is trying to push. Let's take a look on the 1 hour time frame. 1 hour time frame is also at this resistance. This candle is coming to a close as well. So let's see here. I'm going to wait for the candle to close and then we will see what can happen at this point. All right. So the candle has closed bullish. We're still closing below resistance, right? This is still extremely very, very risky to take a buy at this point because we haven't broken above it, but volume is coming in and we don't know whether the volume is going to break through this area or not. So I think the best thing to do would be to also maybe wait for the 4 hour candle to close, because if the 4 hour candle can close above these areas, then we can kind of like guesstimate that, okay, now possibly we can continue breaking above or possibly like, reject this area or whatever price does. Let's take a look on the 30-minute time frame. 30-minute candle is also consolidating over here. Getting really, really difficult. Here we have this resistance. Very tough. Oh, yes. Okay. Breaking up, but a lot of wicking action going on over here. How big was this move? 12, 13, 15 pips. It's a very, very strong resistance. We need price to break above, and then we need price to kind of like come down, create support, and then continue pushing bullish. That's what we want. If this moves, if this is a sustainable move, that's what we want price to do. If this is a sustainable move, which I guess it should be. All right, there we go. A new 4 hour candle has also started. Now we shall see if price is going to come down, create some sort of a support to continue pushing up. And then that could be a start of a very, very good kind of like a minor swing trade up. All right. We need this candle to close bullish. Let's take a look on the 30-minute time frame. 30-minute candle closed with no wick on the top, so there was no trade. Looking at the 1 hour, we have to break above this area to continue up. Also, this 1 hour candle is coming to a close, so we needed to break above the high. And we did not. So now sometimes when we will see this sort of a scenario where we have a resistance formed, but we have a candle closing bullish, sometimes traders will say, okay, even though the 1 hour candle is closing bullish, it's a good opportunity to probably take a buy over here because we can anticipate the break above this area, right? We can't break above this area if we haven't broken above this area. This is a resistance right here formed. Even though the 1 hour candle closed bullish, it still rejected this area and wicked and closed below here. So we need it to break above that area to continue up. You know, as you can see, we're kind of like rejecting that place here again. So it gets pretty difficult. 30-minute candle has also closed. There's nothing at this point. Nothing. Looking at the 4 hour, it's nothing's basically happening unless we can have a 4 hour candle maybe come down and this move up becomes a fake out to go down. Other than that, there's absolutely nothing happening over here. Oh, wow, look at that. We have a candle going bearish on a 1 hour time frame. 1 hour candle closed bearish at this area. See, and then we have this resistance here. Now we have this support. If we measure this range, this is a 16 pip range. So now we don't want to see some sort of a support formed. We need price to break above this resistance, right? Because no support has been formed at this point. Even though if you form a support, this range is like 14, 15 pips. It's a non-tradable range. So we need to break above this area. As you can see, the time over here as well. We're slowly moving into, this is NY open actually right here. NY open. See, we're moving up, but we closed below this area. We didn't break above this area. We closed below this resistance. So yeah, it's getting very tricky. So let's move on to the next 4 hour candle close. So this is the start of the new 4 hour candle right here, right? So this is the start of the new 4 hour candle. You can see where the 4 hour candle started right here. And you can see where the previous 4 hour candle closed right over here, right? So what we need to do is let's go to the 1 hour time frame, skip ahead, skip ahead. Oh, wow, look at that. See? Now the 4 hour candle is coming back down into the range. So if it continues back down in the range, this whole move up, it becomes a fake out right here. And now we're slowly going to move into Asian session, right? Because the trading time for New York was done. And this day on Monday, there was no trade at this point. So we're going to slowly move into the Asian, and then we're going to go back to the pre-London session, and then we're going to see what happens there. So we're slowly moving into pre-London. This is the Asian session. There's nothing to do. And slowly we are coming up into your pre-London right here. This is the start of the new, oh, well, this was the start of the new 4 hour candle. 8, 9, okay. So this is the start of the new 4 hour candle at this point. So what we're going to do is we're going to remove all analysis, and then we're going to do fresh analysis. So Monday was a no trade, price ranged, very, very difficult price action. What we can see on the daily though is that the daily is making higher highs and higher lows, right? 4 hour is still at that resistance. We haven't really broken above it. We haven't really kind of like, showed any bear signs at all. If you look on the 1 hour time frame, 1 hour is the candle bodies, and the bullish move quality is declining over here. So what I could say is that if, let's say the 4 hour candle, let's say if you break this low, can we go down 20 pips, 30 pips? Yeah, we'll see. We'll see if on the 1 hour time frame we can kind of like make sense of a bearish move here or not. But this is the start of the 4 hour candle at this point. Man, this price action is very, very difficult over here. So we need a strong body candle to anticipate a move with volume, right? Because if you look at the candle bodies from yesterday, look, this was yesterday. This was London Open, below resistance, no idea where it's going to go, right? At least if we break below this area here, we have clean move to the downside coming down over here. Or if we can kind of like break above this resistance, then we know we can continue pushing bullish, at least till 153, 500 to the left hand side, 17, 18 pips away. So we'll see. So a strong body candle is like a karate chop through all through all consolidation. So that's what you want. We want a karate chop. Wow. All right. Okay. Yeah, look at these. Look at the way these candles are forming over here. Just small body candles, not interesting at all. So we're only looking at the 1 hour candles to close and the 1 hour candles to move. That's it. We're slowly coming into London Open. London Open is going to provide some sort of volume. Also, whenever prices consolidate, and you got to look at the time and you got to ask yourself that, okay, we had high volume during Asian session right here, and there was no volume. We moved, now we're moving into slowly London. Oh, wow, look at that. This candle, if it closes bearish, I think we're going to have a lot of volume coming down. Look at that candle move. Very, very, very nice. Okay, so this is a potential trade forming at this point. We can look at the 4 hour here as well. Now, looking at the daily, daily has moved up a lot. So this is where high time frame visualization comes into play. Now, if the 1 hour candles are rejecting this resistance 153.350, we have a strong candle forming at pre-London. The question is, what's the probability that the London Open candle will respect this high and then continue pushing bearish versus what's the probability it's going to go up? Obviously, the probability of it going down is going to be very, very high on the 1 hour time frame, right? Because the candle is bearish, we're rejecting the resistance. Let's take a look on a 30-minute time frame. Yeah, 30-minute time frame also has a very, very strong body candle coming down. Now, looking on the 4 hour, we can also see on the 4 hour, if we see that, okay, this 4 hour candle, it broke the low of the previous 4 hour candle and it respected the high. In Market Fluidity webinars, we learned that whenever a candle is breaking the low and respecting the high, that means the start of a downtrend, right? Now, we could argue that, okay, what if we have this support right here and then we have this support right here? Well, these are smaller ranges also on the 1 hour time frame that are broken through when there's a lot of volume in the market, you know. So when we have London Open coming up, I think that could be done at that point. And then all that analysis trickles down to the daily that, okay, if price is really going to move down on the 1 hour time frame and the 4 hour time frame, then what would that mean for the daily? So maybe this is when you really have to break things down and try to explain things to yourself, is that, okay, maybe if daily has moved up a lot and we've broken above this resistance at 152, we moved up, we haven't had any retracement, so maybe that move down on small time frames may mean some sort of a retracement on the daily. Make sense? Even though the daily is breaking the highs and breaking the lows, but you got to use some sort of a, like, you know, cognitive analysis that, okay, maybe daily is in need for some sort of a retracement. Looking at the weekly, let's take a look on the weekly here. Yeah, also if you look on the weekly now, this is something that you need to now maybe keep in mind, the 30-minute time frame or the 1 hour time frame. That's the weekly candle. I think this happened this week here as well. If the weekly candle has only pushed up during the start of the week, maybe it's retracing to kind of like make a lower wick or maybe push down a little bit, right? Because when Monday started, the candles just moved up. Look, the weekly candle started right here. It only moved up. It didn't even move down here at all. But if you look at the previous weeks, you can see this weekly candle has a lower wick. This has a lower wick. This has two upper wicks. So there's a possibility for it to have a lower wick as well. So maybe this is the time when it's going to happen. Now, if we take a sell at this point, right? The stop is going to be 16, 15 pips. So let's take a look on the smaller time frame to see if there's a much more manageable, smaller stop. So let's take a look on the 15-minute time frame. 15 minutes, how like a 9, 8 pip over here. Okay. We're going to keep that as it is at this point. Let's bring this down over here, bring this over here. Oh, over here. Okay, perfect. So yeah, awesome. So at this point, we're not going to wait for the price to kind of like break the low over here. The sell is just going to be executed at like, you know, trade open. If we retrace, then I guess there's going to be an opportunity to add a position, but normally when there's a lot of volume, we've seen pound yen just move. So that's what we're going to do. Let's go to visual mode. Oh, cancel this. We got to use risk percentage. Let's do it 2%. Stop is going to be somewhere up over here within this range. It's also above the 15-minute time frame, and we're looking at it. Let's take a look on the weekly here. Let's take a look on the daily here, right? So daily is probably, we're gonna move it somewhere down at this point, maybe below the daily candle at this point. This is how you're kind of like gauging your profit targets based off of the higher time frames. So if we accept this, go towards the 4-hour time frame, you can see where we've placed this, right? If there's going to be a lot of volume based on the daily, this daily candle should continue bearish and maybe retest this low over here. And just for having the trade run, we're going to remove this take profit, but we're going to keep a visual line right over here. Right, so this is taken on the 1-hour time frame, and the anticipation is that this should continue bearish here, and the higher time frame weekly is that weekly may need some sort of a retracement to continue down. We're not managing the trade. If it continues up to stop us out, it stops us out. You know, this is something that's going to be continuing to run based only off of the daily time frame. So slowly now we're coming into London Open here, not looking at the 30-minute, only looking at the 1-hour candle closes and the 4-hour candle closes. That's it. Only the 1-hour and the 4-hour. If the 1-hour candle closes in a way which may seem that, okay, this may not continue down, then we're going to manage risk. So if we look at this 1-hour candle, if it closes bullish, then we're going to manage risk, right? But if it continues closing bearish, then we're going to leave it open. The trick is to only focus on the 1-hour time frames. That's it. 1-hour time frames and the 4-hour time frames. As the 1-hour candles, they begin to close, we're going to keep trailing the stop loss. Trailing the stop loss above the 1-hour candles. The tea went in the wrong throat. Okay. So we're going to manage the stop. We're going to bring the stop above this 1-hour candle because we're trailing it. And we can see right here, the daily is slowly coming down to this area right here. If you look on the weekly time frame, we can see the weekly is also beginning to go bearish at this point, right? And we haven't even went into New York Open at this point. I think slowly we will get to New York Open. Looking at the 1-hour time frame, let's zoom out here a little bit. Very, very bearish, very, very beautiful. Not going to trail the stop at this point because at this point it's still running. If it was a real account, will you let it run? I'm going to let it run. This is the kind of trade I take on my live accounts too. Like, you know, where you see those 50 lots running, you see 100 lots running the whole day, you know, so that's what we're kind of like trying to accomplish here. So yeah, we're going to let the 1-hour candle close, and as the 1-hour candle comes to a close, then we're going to see what we can do at that point. Also looking at the 4-hour, the 4-hour candle is about to start as well. The new 4-hour candle is about to start. So this is only based off of the 4-hour time frame. All right, so this is the start of the new 4-hour candle, right? Now, when we look on the daily still has room to go down. If we look on the 4-hour, the question begins that what's the probability that this new 4-hour will wick up and then continue pushing down, because the previous 4-hour candle was a strong bearish candle. If you look on the 1-hour time frame, this was a strong bearish 1-hour time frame, right? And that means we were moving into London Open. London Open candle continued pushing down. Even though on the 1-hour we're at support, you know, that's totally fine. We're at support. But if you look on the higher time frame, the 4-hour time frame, now the question is, you have to ask yourself, right? The next 4-hour candle, it's going to have a volume through which session, right? It's going to have volume through pre-New York, New York Open. It's going to have volume through And then the next one is going to be NYSE. So I think this next 4-hour candle is going to have volume through 2 sessions, which is going to be New York Open and pre-New York. It's strong 4-hour, but 1-hour maybe retest first and continue down. Yes. So that 1-hour retest will be price going up on the 4-hour, making a top wick. So that 1-hour retest on the 4-hour may look something like this to make a top wick. So okay, so just do this over here. Let's remove this. Let's close partials, right? Let's close like 25%. And we may want to move stop loss above this 1-hour candle and let the rest run. That's it. Let it run through New York session. Yeah, I think that's a great idea. Let it run through New York session. 4-hour time frame. Make a top wick and then continue on down. Continue on down. Do you find the first 1 hour of the 4-hour disrespects the 30-minute? I'm not even looking at the 30-minute at all. It does, yeah, it does, But we're only focusing on the 1 hour and the 4-hour time frame. That's it. 4 hours coming down to the support right here. See this right here? Awesome. Right? Let's take a look on the daily time frame. Now, the daily has broken the low of the previous daily candle, right? The daily has broken the low of the previous daily candle. Looking at the 4-hour, we're coming down to the support. So if the daily has broken the low of the previous daily candle, this is where you really have to put visualization in play, right? If we've broken the low of the previous daily candle, this does mean that there's some sort of a retracement which is going to happen on the daily at this point. Take profit and calling it a day. Okay, let's close another 75%. Make sure people don't get uncomfortable, because we haven't even moved into NY Open at this point. I'll just get caught on it when the 4-hour closes. I will now use the 1 hour. Thank you. Yes, awesome. Right? Looking at the 4-hour, we haven't even moved into higher volume time at this point. Higher volume time is your pre-New York, New York Open. We haven't even moved in there yet. So you have to wait to see what that's going to do. Slowly, we're moving into 6 a.m. Eastern. This is when the New York live stream starts. So if you look on the 1-hour time frame, we can see 1 hour move down. We move down to a support on the 1 hour time frame. And yeah, this 1 hour candle is about to close. There we go. The 1 hour candle has closed right here. If you look on the 4-hour, we're rejecting this area. Looking at the 1 hour, we're also kind of like, seems like we may respect this support. So I think a good idea would be to maybe move this stop in profits right here. 20 pip profit. We've already secured positions at this point, and now we can just simply let this thing run. If it breaks support, then it breaks support with volume in NY, because now this is pre-NY volume. Pre-NY volume. New York Open is about to start in about 10 minutes. Oh, wow, damn, this is moving. Yeah, New York Open. This is the New York Open at this point. Do we have any news? We have no news. Daily, weekly is bearish as we expected. Daily time frame is also coming down super hard at this point. Looking on the 4-hour, this is New York Open. I guess we can continue down till 150 to 330. This is New York Open over here. Yeah, this area is going to be good. 150 to 330. 152, 340. Oh, nice. Very nice. Almost 70, 80 pips. This is really running down. So we're going to close this position right here. Four-hour, 1 hour is trickling down over here as well. So this trade was only taken based off of the first we had 1 hour confirmation before the London Open. Then we had the 4-hour candle close. We identified volume in the 4-hour candles, which is going to work better. Then we visualized that on the daily time. Oh, look at that. We're coming straight down to this retest on the daily here. Weekly is also coming down here. So I think this was a very, very well managed swing trade. I think it was a pretty good depiction of how you can anticipate volume based off of the 4-hour time frames. So let's move on to the next one. Right. Let's move on to the next one here. 9, 10, 11, 12, 1. There we go. This is the next day at this point right here. And let's take a look on the weekly time frame. Weekly is bearish. Daily candle. Oh, daily candle has come back below this area here. So this was resistance back in March. This daily candle has broken and closed below this resistance, meaning maybe this move up was a fake out, right? But the problem is this daily candle closed with no wick at the bottom. If it closed with no wick at the bottom, this may mean there's no range for the next daily candle to go down, but we can't really be so sure about it. So what we need to do is we need to take a look on these smaller time frames and see what's going on. So looking at the 4-hour, we are kind of like creating some sort of resistance here because this is the start of the new 4-hour candle. We also have this support right over here in the 4-hour candle as well. So it's kind of consolidating. But if we just look at it from a fake out perspective, let me just explain the fake out here really quick. We had resistance, resistance, price breaks resistance. This candle comes down to potentially retest resistance to go up, but it closes below resistance. Now, if this daily candle is retesting this area, then there's a higher probability for it to continue pushing down to probably this price over here, 151, 151, 100, you know, what's this? Yeah, 151, 100, whatever the price is. So yeah, that could happen. So maybe we could look for a sell here because maybe this daily candle is a fake out. Unless now, even though this candle has no wick to the downside, if we want to look for buys, if this daily candle has no wick to the downside, then we want price to break and close back above 152 because we rejected 152 here strongly and we may reject this here again. Looking on the 4-hour, we're consolidating. Let's take a look on the 1-hour time frame. Yeah, we are basically consolidating here in the 1-hour time frame as well. We have a support, we have a resistance. That's it. We have a support and we have a resistance here. Awesome. Now we got to take a look at where can price potentially move if we break the support, right? If we break the support, then there's a potential, if you look to the left-hand side, let's extend it to the left-hand side. There was also a support to the left-hand side. And before this support started, we have to look at where the next support was. Oh, what's this? It's 3:40 a.m. in the UK. I'm going to call it a night. Hey, man, Zar, thank you so much for tuning in. I really appreciate it. It's going to be uploaded here soon as well. So before that support, we had a support down here, 151, 200, right? So maybe if we can break below this area, price can continue down to this area, 151, 200, and that may be a move based off of the 4-hour time frame here as well, right? Yeah, I think that's going to be a pretty good idea because if we break below this wick on the 4-hour, then we can continue down here, 36 pips away. Very, very easy analysis. And that would also make sense because the daily fake out, whatever. Awesome. Let's do that. Let's wait for that. All right, look at that. We have this candle coming down, the 1-hour candle. We are breaking below this low at this point. If we are breaking below this low at this point, I think that's the 4-hour candle also breaking below this low. And yeah, I think this could be a pretty good idea if we can break below this low and continue pushing down. I think this could be a very, very, very good move. So that's what we're going to anticipate over here. The 1 hour candle is also about to close, so we're going to let it close. Okay, there we go. 1 hour candle has closed. We have closed bearish. Now, if we want to take a trade based off of the 4 hour time frame right here, we want the 1 hour candle to, now at this point, we want it to break below this low to continue down. That's what we want. We want it to break below this low at that point to continue down. Then that's going to be a 4 hour visualization for it to continue pushing down. Very, very easy trade. So that's what we're going to do. So probably a sell stop or market. Yeah, we're going to go with market. All right, let's see here. Maybe it's going to make a top wick. If it does make a top wick, that's going to be perfect. And then we can enter because this is pre-London volume coming in. 4 hour candle. There we go. We're breaking below the low at this point. So we're going to take a sell position. Stop is going to be probably somewhere up over here. And our take profit is obviously going to be way down over here. Go to trades. Man, with these swing trades, your upside is massive. If a 1 hour candle closes below support, you will execute trade right away after it closes. No. Yes. Yes. Yes, Paul. If this 1 hour candle, it closed, if it closed like this, then I would have executed the trade because we closed below support. But since it left a wick below support and closed above support, then waited for price to break below this area to continue down, and thus also the break below on the 4 hour here as well. Yeah, it should be a pretty simple trade. Oh, wow, nice. So the 4 hour should basically continue pushing down over here till 151.272, I guess. Not securing at 10, not securing. Oh, nice. Look at that. Straight down to the area. Very, very, very simple trade. No confusion, even though the 1 hour had some wicks over here, but we only went off of the 4 hour time frame and we went off of the daily possible fake out rejection right here. That's it. That's all we did at this point. So probably going to close partials, maybe close like 75%, put stops at break even. Yeah, that's it. Oh, wow. Still moving over here. Very nice. Now, since we broke below in the London session, if we do retest, maybe we can retest this low. Because look, in a very, very high session, high volume session, we just created a low on the 1 hour time frame. Where is it? Yeah, right here. We created a low on the 1 hour time frame. If we kind of like, retrace, create resistance, then that could mean if we create resistance, then we can retest this low, and then we could probably take this trade again. Actually, let's close this right here because it's, oh wow, it's like pulling up its pants over here. But still, I guess, pretty good. High time frames are like high probability setups. Yes. Sometimes it's difficult, like Monday, right? The first chart we came up to, very, very difficult. No idea what was happening. Second one, kind of difficult, but that's when the volume started. You can see right here now, the 1 hour is coming back in the range. Maybe this move becomes a fake out, but the best thing is we've created a low over here. So if price can break and close below this area again, then we can take another sell to continue down. That's the whole beauty about price action at this point, because now we're making these clean candles here as well. Look at this. 1 hour candle closed below this area. So if we create a bearish candle, then we can continue on pushing down. So that's something we can anticipate. Let's speed it up here a little bit. We're slowly we're gonna move into the new 4 hour candle. This candle is about to close, and then we're gonna take a look at how the new oh wow. Damn, Daniel, what's happening with the 4 hour? 4 hours straight rejection over here. All right. Oh, there we go. 4 hour candle closed with no wick at the top. Daily candle still open. 1 hour candle also closed with no wick on the top. So this, I don't think it means a buy because we closed with no wick on the top, right? This kind of can just come back in the range here as well. So I think better idea would be to maybe if we create a support here or reject and then continue to go up. Or if we can break below 151, 600, then we can potentially go down. That's it. Easy analysis. No confusion at all. No confusion, no trades over here, no FOMO, no rushing into nothing. Oh, I guess we missed it. Oh, it's a good thing we missed it. Move too fast. All right. See, this one I kind of closed back in the range over here. So we have a double fake out now. This is a double fake out. Price went down, went back in the range. Price went up, went back in the range. So now this is oh, Ruby, hello. So this is a non-tradable range right here. This is where price is consolidating, and we need to wait for price to break out of this range. So we need to wait. All right, what are you gonna do? What are you gonna do? This 1 hour candle is about to close in 3, 2, 1. Now this is pre-New York candle, right? Now we're closing below this area, but the candle has no wick at the bottom. Looking at the 30-minute time frame, let's see. Yeah, it has little to no wick at the bottom. Yeah, it has no wick at the bottom. So I'm not sure whether we should wait. I think if we can wick up and break the low, then we could take a sell for price to continue pushing down. Because this will be an amazing, amazing trade to continue down to retest the low, which was formed in the London session. Makes sense? To retest the low, which was made in the London session. That's what we may want to accomplish here because there's clean candle over here. So price action is very simple here. So yeah, we're making this top wick, slowed down the price action. If we can break below this area, oh, we came so close. Break below, let's say 151, 560. Then we can take a sell for price to continue down. Wow, this is a 33, 36 pip range over here. Oh, this candle is also about to close here now. All right, so if you see now, this candle is about to close in this consolidation area, which means no trade range. No trade range. So we need price to break below this area to go down, or probably close above this area right here to go up. So that's something we have to wait for at this point. All right, let's pause it here and remove these arrows. We have the candle coming to a close. Let's bring this right here. It's much easier. All right. Candle's coming to a close. Okay, perfect. So now I guess we can adjust this range here. Probably adjust this right here as well on the 30-minute time, on the 1 hour time frame. So yeah, I mean, I don't know if we can break below this support, then I guess we can go down. Let's take a look on the 4 hour time frame. 4 hours also at the support right here. So Yeah, I would say so. On the 1 hour time frame, it makes sense. If we break below this low, we can continue down. That break below the low would also mean a break below, let's take a look on the 4 hour, would also mean the 4 hour breaking its own low to probably continue down. So yeah, let's see here. With the NY push, oh, do we have news? We have no. President Biden speaks. Yeah, I don't think Biden. Do we need to look out for fake out wicks rejection or not? Fake out wicks rejection? Probably not. Because if you look at this bullish candle, it made a lower high, but it didn't make a lower low. So fake out wicks, I'm not sure if what time frame you're talking about, but I do think that if we can break below this low, then there's a very good possibility we can continue pushing bearish. We'll just need to see where the stop is going to be. But this could very well work. Even if it's above the 4 hour, 1 hour candle, it's going to be like a 20 pip stop with a 30 some pip range. All right, we're moving here. Almost. See, if this 1 hour candle can break the low right here, then that's going to mean we're creating a lower high and a lower low in a high volume time, in a high volume time. So that's what's really going to push price here, hopefully. Hopefully, price can push with the NY open and continue on down. We got 20 minutes left, 10 minutes left here for the 30-minute candle to close. So far, we're rejecting. Nothing is happening at this point. Oh, slowly we're coming down. 30-minute candle is about to close, but we still haven't broken the low. Okay, the 30-minute candle has closed. Let's take a look on, yeah, 30 minutes just rejecting over here. Very difficult. So we're going to focus on the 1 hour time frame. 1 hour time frame coming down slowly. Oh, there we go. We're breaking below the low over here now, right? Looking on the 4 hour, 4 hour is also breaking its own low at this point. Daily is whatever. Daily is probably, if the 1 hour candle goes down to fill this wick, then probably daily candles are going to come down here as well. Because if you look at, sometimes if you look at the news, then news events go like this. We're going to have a move up. If it's really good news, then price will come down, leave a big wick, and then it will continue pushing all the way up, right? So that's how we should picture the daily candle. But if we're breaking the low over here, and if we're trying to take a sell, if we take a sell right here, right? So if we keep the stop above the 1 hour candle, it's going to be around a 20 pip stop, right? If you look on the 30-minute time frame, on the 30-minute, if we keep the stop above the 30-minute candle, then the stop is going to be around 10 pips, right? If the 30-minute candle is breaking the previous low and the previous low, which is resulting in the 1 hour break of the low, then I think that's a pretty decent stop to have and really anticipate price to fill this entire area coming down. Obviously, we're going to take off and take profit. And yeah, I guess retracement. Okay, there we go. We're coming down here now. The 4 hour candle is also about to close. And I think if we can close bearish, we can continue pushing. Oh, nice. Very nice. See this 4 hour candle? It's coming straight down. It's about to close in about 15 minutes. 1 hour candle is pushing very nicely down here as well. Very, very nice. Your flight scheduled for this has, rescheduled. All right, we'll take a look at that later. All right, so we're coming down over here. Probably just gonna put stops at break even. And oh wow, look at that. Oh, coming straight down. Okay, we're coming down to this wick at this point. This was only taken based off of the 1 hour time frame. That's it. Only based off of the 1 hour time frame. We're gonna close 75%. Put stops at break even and let it run, because if the 4 hour, okay, let's see where the 4 hour candle closes. Okay, this is where the 4 hour candle has closed. Looking at the daily, we're also bearish. Daily still has room to go down, right? Looking on the daily, we still have about what, maybe 20 more pips to go. New 4-hour candle has started, so can the next 4-hour candle continue dropping 20 more pips? And that's going to be the daily candle coming down to this area right here. On the 1-hour time frame, we may retrace, we may not retrace. So that's the whole beauty of, letting the trades run when you've secured profits, because, the high time frame always prevails. Always, always. So we're going to let it run. And then we're going to move on to the next day. Let's speed it up here a little bit, and let's see what happens here. Oh, nice. Look at that. 4-hour candle is continuing down. Very nice, very nice. Oh, I think we've broken below that area over there. This is the runner at this point. 1 hour broke below the support, possibly doing a retest. This is when you're letting the runner run throughout the New York session after securing profits, because you're like, okay, you know what? This is a runner. It's going to continue running. If it stops me out at break even, it does that. If not, then actually we're going to close this right here and then move on to the next day over here now. Wow, this is a solid move over here. Daily candle continues straight bearish after that huge fake out. Okay, let's remove these zones here. This one. And this zone here as well. Okay, let's move on to the next day here. Let's do this. This is Thursday has started, so we shall move to 9, 10, 11, 12, 1. This is the new 4-hour candle starting right here, right? This is the new 4-hour candle starting. This is a Thursday, and as this candle is starting, we are creating some sort of a support here as well. So we're going to remove all these analysis, and then we're going to try to break down price over here and see if we're going to get a continuation, or are we going to get some sort of a retracement. All right. So obviously we're creating support, and obviously we're going to do the same things we do over and over again. We identify support and resistances first. We got a support, we got a possible resistance area where the 4-hour candles are rejecting with wicks. Let's take a look on the 1-hour time frame. Let's remove all these zones on the 1-hour time frame. Everything removed, and let's copy all this from the 4-hour over to the 1-hour. All right, there we go. Perfect. We have a support idea, and maybe we can make this a little bit better right here. Right here. Okay, perfect. Now we have the 1-hour right here. Now, if we break above this resistance on the 1-hour time frame, we got to ask ourselves that, okay, where is price most likely to go? If we break and close above this area, most likely price is going to continue pushing up towards this resistance around 151, 200. So this is going to be our target zone if we move up, which is going to be a retracement. And where can price go if we break below this low? Looking to the left-hand side, we have we have this wick over here, which is also the wick right here. And then below this area, we have all this zone, this open territory going all the way down towards 150, 300. So that's going to be a very, very good target. And if you measure the range, this is going to be almost like a 39, almost like a 40 pip range at this point. Beautiful. So all we got to do at this point is to wait for price to kind of like, break below this area and then take a sell and price goes down, or break above this area, take a buy to go up. Taking a look on the 4-hour time frame, we are forming a bullish candle, which means if the next 4-hour candle breaks above the high of the previous one, then obviously we can continue up and retrace all the way up, because we have clean candle to the left hand side, so that retracement will make a lot of sense. So yeah, I guess that's something we're going to look for here. So this is the selling situation and this is the buying situation. I guess I'm leaning towards more buys at this point, because the 4-hour is bullish, right here. We're rejecting this area. We rejected this area before as well. So that should make sense. Theoretically, it should make sense. We haven't broken above this high yet. We need to break above that high to continue pushing up. To continue pushing up. All right. The 1 hour candle has closed. We can see the 1 hour candle has closed bullish. There's nothing. We're consolidating. We're slowly moving into London Open right here. And as we move into London Open, I think that should give us a much more clear picture of where price is going to go. Let's take a look at the news. We have no news over here. All right. Is this going to be our opening here? Can we break above this high and continue pushing bullish? That's the question. That is the question. Pretty good gain over here with swing trades, 21%. Oh, there we go. We are breaking above this high, right? We have 15 minutes left for the candle to close. The 4 hour candle is also breaking above this high after making a lower wick. So I think this is going to be a very good opportunity to enter a buy. And okay, let's first enter a buy and then we're going to talk about the stop loss. Okay, so if we keep the stop loss below this previous wick, this is going to be a 20 pip stop, right? Let's take a look on the 30-minute. So we're going to do the same thing we did with the last trade. So we're going to keep the stop loss below the 30-minute candle, which is now going to be a 15 pip stop, and we're going to anticipate price to continue pushing bullish because we are breaking above the 4 hour high over here, and we're breaking above the 1 hour highs. So there's a very good possibility for price to continue bullish. Awesome. Very nice trade. Well done. Well done. Another one for the books. Oh, nice. Look at that. 4 pips. Oh, maybe not. Well, if we do continue closing bullish, I think we can continue pushing up. All right. Now, this is when you know there's a very, very high probability for price to continue bullish. There should be no doubt in our minds that this should wick down and just break above the high, and we should continue up on our merry way. Looking on the 4 hour time frame here as well, just amazing, amazing move. Looking at the daily, it makes sense on the daily as well to kind of like reject this area to continue up, and then we can have a very, very nice day. Let's take a look on the 15-minute time frame. All right, yeah, makes sense. Makes sense. 15-minute is also closing above that area. Beautiful. What's this price? 159.80. Okay. 159.80. All right, we're making that lower wick to continue up. I guess not. Oh, hold on over there. What's happening? 970, 980. Could this be a... Oh, see now, we're breaking below the low on the 15-minute time frame. So I guess this is going to be... Maybe we can close partial positions over here. Close 50%. Yeah, because... Let's take a look on the 4 hour, 1 hour. I just don't want this to be a fake out. That's the whole problem. Oh wow. That's a if this is a liquidity rig to go up, this is a pretty big liquidity rig. Oh damn, look at that. Yeah, it's better to maybe close this position. Yeah, better to just close. What the hell's going on over here? All right, let's focus. Let's just stay focused. And let's pretend we didn't even. So whenever you take a losing trade, just pretend you never took that trade, right? Even though it looked good. This trade looked amazing, right? But sometimes those amazing things, they don't happen, you know? And if that doesn't happen, there's nothing we did wrong. We waited for price to break above the high. We broke above the high. Candle closed above the high, gave us the confirmation to go up. We took the trade, and maybe the probability wasn't in our favor, and now it's trying to go down. So whenever you're taking a loss like that, just remove it from your mind. If that loss is something that was out of your control, but you managed risk, just let it go, right? So we're gonna regroup, and we're gonna wait for this 1 hour candle to close, and then we're gonna see, because if this was a fake out over here, then probably we can continue pushing bearish. If that was a fake out, so this candle has to close a strong bearish candle. Looking at the daily, we are bearish. We got this very strong ass support over here too. Interesting. Oh wow, look at that move with the 1 hour candle coming down. This is just, oh wow, look at that. This is extraordinary. Look at this 30-minute time frame. Wicking at this area, looking at the 1 hour time frame, we are also wicking at this area. I think at this point, if we can break below this low on the 1 hour, then I guess it's going to be a very good opportunity to take a sell. If we can break below this low, right? On the 4 hour time frame, that's going to mean the 4 hour candle breaking its own low and breaking below this wick here to the left hand side. Yeah, I mean, I guess that's going to be a good idea, because we've also had a fake out here. Oh, where is it? Right here. Yeah, we had resistance. Candle closed above. This candle had to do a retest to go up, but it didn't. It closed back in the range, which means if this candle couldn't maintain its move bullish, then there's a high probability it's going to continue on bearish with volume. Man, we're really lucky we have volume in this simulation session. Sometimes we have sessions when there's no volume. So we're going to wait for this candle to break below the low, and then we're going to probably try to execute a sell. Oh, see that? Now it's coming up in the first 2 minutes, but it's also during a high volume time. So probably going to go with the lower risk, because it's in the first 2 minutes. And if you do retrace, then we can possibly add a position or whatever. Okay, let's remove this. Perfect. Let's take a look on the 4 hour time frame. 4 hours also breaking below these lows. 4 hour has clean candles going all the way down over here, actually. 30, 40 pip, 30, 34, 35 pip range. What's that? Full margin? Are you sure? We'll see, we'll see. Next one. If we get the opportunity on the next one, then we'll go full margin on the next one. That's going to be the last one. All right, let's take a look on the 1 hour. 1 hour is coming straight down here. Oh, nice. Wah wah wee wah. Very nice. Coming down. All right, 1 hour candle is still open over here. Yeah, let's just wait for the 1 hour candle. It's a very strong rejection area here. Actually, if daily is coming down, can we come all the way down to this area here? 149, yeah, I guess, yeah, 149, maybe 150, right? 40 more, yeah, 150. Because look, now we're in this clean territory over here. And here's the thing. So I'm not going to secure positions. Oh, wow. Actually, we're up about 36, 38 pips. Let's close partials here. And this is something I want to maybe look at. So maybe put stops at break even. So if we look at time over here, this is now slowly we're moving into New York session. And as we move into New York session, if it continues down, amazing. But if we do a little retracement, because we broke the strong support, we do retracement and then retest this low like we did right over here. If you look at the previous trade, right here, we came down, retraced, fake out whatever, broke below this low to retest this low. If you can kind of do the same thing to kind of like retrace and come down to retest low, I think we can add a position. Oh, okay, we're going to get stopped out over here. Okay, we tried. It's okay. We're just gonna full margin the next one. Um, yeah, I guess that could be a possibility. Yeah, probably gonna get stopped out. Oh, got stopped out. Got stopped out on the trade. But don't worry. Man, oh man, look at this area right here. This is what we call a McDonald's arch, right? And this McDonald's arch is just perfect to continue on down and retest the low. Look at this right here. Just insane. The way the structure is formed, we're in pre-New York volume, NY Open is going to start. This is just screaming, just sell me all the way down over there. So this is when we can listen to manual, and we're going to go ahead with, let's say, 6% risk over here. We're going to take a sell. Stops are going to be above the previous 30-minute candle. Take profit is going to be all the way down over here. Accept it and remove take profit and just easy trade. Let's take a look on the 4 hour time frame. 4 hour is whatever, because even though the 4 hour candle is bullish, oh, right here, even though the 4 hour candle is bullish, you guys got to understand the smaller time frames are going to build up the overall 4 hour and the higher time frame candles, right? 1 hour time frame creating resistance. 30-minute is just perfect. Can't get any perfect than this. Look at that. Just amazing. These are the kind of trades I will take over and over and over. Even though if I'm doing somersaults, I'll still gonna keep taking these trades because these have a very low probability of not working out. Look at that move. We should continue down over here. This is just amazing. Look at this 4 hour. This 4 hour is going to break this low over here. Guaranteed before it comes down to a close because there's so much volume here now on this 1 hour candle. I mean, it's apart from the fact we're rejecting this area, but we're coming into NY Open at this point now. And as we come into NY Open, we should be, well, theoretically, we should be getting that push. Probably put stops at break even here in case we get stopped out again. All right, as we break below this low, we're just going to secure positions and yeah. Yeah. Yeah, come on. Touch 150. 150 is what we want. See this daily? Daily is at 150. We want 150 touched. 150 is coming down. Are we going to touch 150? Oh no. A lot of volume coming in for 30-minute. 30-minute has also created a minor resistance in a bearish trend. We're coming down. Oh, nice. Look at that. To 150.090. I think that's it. We're going to end it right over here. Very nice. So these last gains oh wow, still going. These last gains we didn't have gotten them because the risk was a little bit higher at this point, right? So this entire webinar was based off of the high time frames, 4 hour time frames, 1 hour time frames, waiting for price to kind of like break below lows, looking for clean candles to the left. The main idea was to look for clean candles to the left. If you don't see any clean candles on the 1 hour time frame or the 30-minute time frame, we saw clean candles on the 4 hour time frame, and we trusted the 4 hour time frames. Oh, there we go. We crossed 150. We trusted the daily time frames. We use visualization on daily time frames. So I would say kind of like, go over this again. Do your own simulations, do them as well. That's going to help you here as well. Oh, wow, look at that. Are we going to continue pushing bearish? Oh, Friday. Okay. Friday was just retracement here. Yeah. So go over those things and you will learn a lot from this. The recording will be in the database in the next 4 hours, 5 hours. And yeah, man. So I guess next week there will be no live streams. I'm going to be traveling next week, but the breakdowns are still going to come in. And the week after that, we're going to get back to the regular live streams here. So take care, everyone. Have a great weekend. Take care of your family and friends. And yeah, we'll see you in the breakdowns there.